All right, good morning. Today is 11/29/2023, and tomorrow is the last day of November 2023. So, Friday, it's December 1st. Time flies when you're having fun. So, hope everybody had a good Thanksgiving holiday. It was basically like a 4-day weekend. So, which is great. Um, Anyhow, so yeah, lots going on. Let's see, the GDP number came out this morning at 5.2%. Wow, which is it was revised to 5.2%, up from 4.9%. So anyway, theoretically, the economy is humming along pretty good. It's extremely subjective as to how well the economy is actually doing, which is kind of crazy. So everything that I see nowadays, whether the consumer's in good shape or whether the consumer's in bad shape and whether the economy is humming along or whether, we're in a recession. I mean, there's people that suggest that we're in a recession now. And then, of course, the same thing with inflation, we talk about inflation a lot, and everything is so subjective, as far as inflation goes. I think there was a Bloomberg article that came out in the past couple days that showed how much prices of everything had risen in the past few years, right? So, it's funny at this point in time. There's a lot of talk about the things that we've been talking about for the past couple of years, comparing everything to the pandemic and how it was prior to the pandemic and the general. It seems like more people are becoming aware that, the inflation was basically the direct result of the pandemic response by the Fed, and even Powell came out and admitted that they may have overdone it. So it's a little late now, and like I always say, the inflation damage has already been done, right? So I've mentioned this a bunch of times in probably the past year that now that the general price level of everything has gone up, 20, 30 or more percent, and of course that's debatable and subjective too. Even if the inflation rate was zero, that doesn't mean that the price of anything's coming down. And so the media kind of uses the whole idea of, well, they use the wordplay, so to speak, of, inflation coming down to subconsciously make people think that that means prices are coming down, right? And then, of course, Biden came out and said something to the effect of, like confusing the rate of inflation with the level of prices. So that's a very common sort of thing. But anyway, back to the market. Market is just screaming higher in November. Geez, the S&P's up close to 400 points, I think, in November. Pretty amazing. And this rally basically, we'll zoom in on this chart in a minute, but first I wanted to take a look at kind of the bigger daily picture on the daily chart here, because as you see, right today, just today, we are beginning to push up into that big resistance zone that I've had drawn on this chart for, all year, basically. Right? Look at that, 4,600 directly overhead. Here's what's kind of interesting. Back in July, there was the big summer rally, humongous summer rally from the beginning of June, basically, to the end of July. So June and July, you had, a rally that's similar to the one that we're having right now. Only this one, is basically a month, whereas that rally was, it was a little over 2 months, right? And kind of here's what's interesting too is that the current rally started from right about 4,100, and pushing on 4,600. And this rally back, in May, actually kind of started. Basically, if you look at that price bar right there, I mean, obviously it was started from a little bit lower, but it's very similar in that you had like this price bar like right around 4,100, and then sort of a straight up rally to 4,600. But look at that day. I remember that day extremely well because it was like, that was this big outside reversal day. We had a gap up, and this is obviously where the trend line is drawn from, but it's just a textbook technical analysis reversal. They call it an outside reversal. It was a bearish engulfing candle, the whole thing, right? I mean, it was so obvious, and we talked about it at the time. What was not obvious and what was weird about it was the subsequent 2 or 3 days, right? Typically, you get a outside reversal bearish engulfing candle like that, and then you kind of follow through. But the following day there was a gap up like halfway into that price bar, and a few days where it kind of hung around the middle of it, and then we got the down cycle. So anyway, as we speak, pushing up against the resistance that goes all the way back to, and this is crazy because like this market, is approaching, well, I should say sort of approaching, the all-time high, but this goes all the way back to, Russia invading Ukraine and, the top of the bull market, so to speak, at the very beginning of 2022. The fact that the market actually hit the all-time high right, literally at the beginning of 2022, like was it January 3rd, makes it kind of easy to, just kind of makes it easy to remember. But anyway, so you can kind of see what's happening here. This particular upward sloping trend line probably, I mean, it needs to be adjusted because, well, of course I grabbed the wrong trend line, because I'm going to say that it needs to sort of incorporate this low right here. So I was looking at that, trying to figure out, kind of what the best sort of angle for this might be, and I'm thinking at this point, I'm thinking kind of drawn across those two lows right there. So anyway, I guess I'll save this like since I moved the trend line, but I haven't extended the support level over yet. But anyway, so here we are. We're approaching like these highs, and this goes all the way back to, the first quarter or so. Well, the first quarter in a month, but all the way back to, the Russia invading Ukraine sell-off at the beginning of 2022. And the funny thing is, the market had been, prior to that, the market had been climbing from the pandemic response and all the money that was created. And then, the Russia invading Ukraine sell-off and the first bounce, there was a bounce, a bigger sell-off, another bounce, and then, of course, a bear market. And then and the Fed started hiking rates and all that good stuff. And so, man, it's amazing. It's amazing where we've come since then. But the thing that I wanted to look at was, well, there's a couple things actually. First of all, let's look at the weekly here, right? Because the weekly is a pretty interesting picture too. Love looking at this weekly chart. It's got all the. Here's what's interesting about the weekly is that this particular trend line, as we speak here, market's trying to poke above it. What I wanted to show you on the daily. Let me jump back to that daily chart that we were just looking at there. I forgot about this. Here's what I wanted to show you on the daily is this RSI. Right? Well, maybe. Yeah. Let me see if I can fix this. There we go. Yeah, that RSI is, as we speak. And, in the last time we were here, it was starting to, push into overbought territory. And so there you go. I mean, you can kind of, you can look back on the chart and see different spots. There's an interesting one, right? You can see different spots where the RSI, this one's kind of, Yeah, I suppose that this sort of matches up. It didn't really get too overbought here, but anyway, it kind of feels like things are a little overdone to the upside. I'll just come out and say it, right? And so um, I know that this is. Let me see if I can get this. I got my charts all sort of set up now so that no matter what chart I click on, well, see, I knew I was going to throw things off by. There we go. All right, so I think we're looking okay there. Yeah, okay. Anyway, so back to the weekly chart. The weekly RSI is not overbought, so that's one thing. But when you look at the rally we had too, we're on the fifth week of the market being higher, and so interestingly enough, though, I mean, as we speak, the market had kind of a push higher to open, and it just kind of it got up to really close to 4,600, and now it looks like it's trying to reverse. So um, it'll be interesting to and there's a Fed speaker on. You're gonna have a bunch of that. So it kind of seems to me that and this is going to be interesting too because December, um, they'll start talking about the Santa Claus rally and this and that and new highs. And the crazy thing is that a mere 4 or 5 weeks ago, everyone was bearish, right? I mean, the CNN fear gauge was on fear and everything, and people were kind of freaking out because the market, had sold off significantly, back down there to 4,100, and then everything just turned on a dime. Pretty interesting. Everything turned on a dime, but the structural problems are still there and still intact. Um, seems to me that we may be looking at a little bit. It may be time. Right? I know that a lot of people have been thinking that, but boy, these breakaway gaps just absolutely incredible. But when you look at this resistance area here and this prior high right there, kind of makes sense that the market could potentially stall out in that area. It's been kind of dull since Thanksgiving. We've had a lot of go back to my clean chart here. This is Thanksgiving week right here, and these are pretty narrow range days, right? I mean, not much going on there. I think it's been kind of flat. So like these moves happen sort of on just a couple of days. You get a big, it almost felt like short covering. Um, I know, I see stuff on the internet about CTAs they were, under positioned and they have certain mechanical strategies they have to use. And so basically, they chase the rallies. Um, there's a lot of index fund type stuff going on and institutional, mechanical strategies that basically, buy regardless of anything else. Fundamentals, the market is overvalued by all sorts of different historical valuations. Oh, I see I need to fix my chart just a little bit here. Every one of these little views that I have on my chart um, is a little bit different. So what I've been trying to do is save them so that the axis lines up no matter what chart I got. Anyway, let's look at the Qs here because the Qs pretty darn amazing when you zoom out on this chart. There we go. There's that big cup and handle, right? And I've got one of my charts. I got the channel drawn here. I mean, this is like textbook sort of technical analysis going on here. So you got this big cup and handle, but boy, directly overhead is the all-time highs in the history of the world on the Qs, and the Magnificent Seven or whatever, obviously, or make up about 30% of this, and so it's kind of the interesting thing is that the small caps, um, not not surprisingly, the smaller caps and sort of the more speculative stocks have, kind of been where the action is lately. So the big question is the rally broadening out and that type of thing. And so, this time of year, typically, I think I mentioned this last show, typically this time of year is when you start to see, animal spirits and speculative activity and a lot of buying in the smaller caps. Interesting thing about the Russell, and I should probably pull up my chart of the Russell here. That's already marked up. There we go. See if this matches up. That's pretty close. Let me fix this real quick so that. Whoop. Yeah, it's a little tricky when I have it on the show. It's a little different than having it full screened on my computer. So let me save that. I'm just trying to get it to where all the bottom axis here matches up on all the different charts, because that way when I flip from chart to chart, so every now and then I'll change to a chart and it'll cut off like the dates or whatever. So yeah, so here's the markings that I've had on this for, geez, there's the pandemic back there. So this chart goes back a ways. And this is incredible the way that the Russell 2000 is just sort of channeling, right? And so, it's pushing right about halfway into into this channel that it's been in since the beginning of 2022. So this is kind of it's kind of interesting. So you can see, there's a few times where, well, a few times there's a lot of time where this thing just kind of trades sideways and doesn't do anything, right? And then there's like back here in the summer of 2022, so not this past summer, but the one before, it went basically straight from the bottom of the channel to the top of the channel. But it'll be interesting to see if the small caps can continue to push higher and work their way up. But if you zoom in on this chart, it kind of looks like this may be, if I drew a line there, this is like kind of a stall point here, right? So it's running into some resistance from these prior lows and that. So, but hey, just an amazing sort of rally off of the support area. So it's kind of a good looking chart. Let's look at ARK, because ARK is sort of this is my proxy for growth stocks, speculative type stocks, the stocks that went absolutely bonkers during the pandemic and then sold off. This is almost like my dot-com bubble proxy, I guess you could call it. There's a lot of similarities, and of course I've been saying this for years, but similarities to the dot-com bubble, which I remember pretty well from back in those days. Just crazy moves on stocks and moves higher, and seemed like it would go on forever, and then they cracked, right? And so I think let's look at like here's a good example, be like Zoom, right? So this is a good example of a dot-com bubble 2.0 stock, and this is I think one of the favorites in ARK, so this always sort of comes to mind. But these kind of stocks, it had its own bubble and bust, but these kind of stocks, when you start to see them recovering, and there's quite a few of them, like I believe PayPal. It doesn't look like, when you zoom way out on it, it doesn't look like much. It looks like, same sort of thing, like the dot-com bubble and bust. But whoops, when you zoom in, these kind of stocks, the percentages of of these current rallies are pretty significant, you know. Um, and so, hey, I mean, maybe some of these things have bottomed. That's where the conundrum sort of lies. Is you got the magnificent seven stocks hitting new all-time highs, and you got the rally starting to broaden out and this type of thing. But I mean, basically, we're at a spot right now where the market's sort of acting like, hey, we're overbought here, clearly overbought on RSI, straight up rallies and all that. And so it feels like it's time for a pause. And so what's going to be interesting, look at this. I mean, this, 40 to 60 is a 50% rally in Square. And so a lot of these beaten down stocks, they're having their little end of year animal spirits rally, but it's going to be interesting to see what happens if the S&P or the Qs hit these resistance areas and have a little down cycle, right, which should be probably coming along at any time. So maybe next week, because there's always the end of the month and beginning of the month shenanigans as far as positioning, that type of thing, and then the end of the year, and then tax loss selling. So, there's a lot of there's a lot of plumbing and mechanics in that affect the market more so, I think, anyway, more so than they always say that it's earnings, right? It's earnings, and then you see a company that comes out and they beat on revenue and they beat on, everything, revenue and earnings and growth and all that type of stuff, and then the stock tanks, 10, 15% when the earnings come out. And of course, a lot of that's, the forward guidance. But anyway, I think that there's a lot that goes on sort of behind the scenes that pushes the market around as far as like mechanics, I guess would be the best way to describe it. Mechanics and plumbing and that type of thing. More so than, hey, is the market fairly valued? I guess you could say it's fairly valued based on, the efficient market hypothesis, but how efficient is the market if, let me go back to the S&P here. How efficient is the market if all of a sudden, in the span of 1 month, it goes up 10%? And so the big thing now is there's a lot of talk about the Fed being done, or the Fed being done. I mean, not only being done hiking interest rates, but there's a lot of talk about the Fed lowering interest rates, starting at the beginning of next year. I mean, they're talking about the pivot now over and over and over. And quite frankly, there was a bunch of rallies, and I can't remember when they were, but over the past, couple of years, and especially, well, probably it could have been this one, but there was some significant rallies based on the idea that everyone thought the Fed was going to pivot and start lowering rates, which they haven't done. And based on like this GDP print, 5.2%, and the fact that inflation, the core CPI, is still double their target at 2%. The Fed and the funny thing is that usually the thing is watch what they do and not what they say. But the Fed has been saying that they're going to hold rates higher for longer, and this just seems like today's GDP print and the fact that unemployment's still reasonable and all that excuse me, I'm just getting over a cold. They are going to hold higher for longer, and I don't know what all the pivot talk is about, right? Unless you start digging for signs of a weakening economy, which they're there, and so everything's subjective nowadays, and it's kind of crazy because we got more data than we've ever had in history, and yet you see people arguing both sides of whether inflation is under control or, or still out of control, or whether the Fed's gonna hold or pivot, whether the economy's good. A company comes out with earnings, and you see all sorts of data that says, well, this earnings release was good or it was bad, right? And then, of course, going back to what I said before, the Buffett indicator shows that the market is, extremely overvalued, I suppose. Um, It'll be interesting to see the new Buffett indicator now that the GDP's out, because the whole like market cap to GDP ratio, that's something to consider. And then, of course, we haven't even talked about, and I'm not going to talk about, but I just thought I'd throw it out there, is the fact that the government is like racking up debt, has already racked up debt, and we're about to hit 34 trillion in debt. And so it's just, out of control government spending and paying interest on that debt. That's a whole nother conversation for a different show. But back to the market. Seems to me that we're kind of in a spot here where the market is probably due for a little retrenching, right? So, but hey, you never know. There's a lot of what I like to call inertia, and so there's a lot of inertia going here. But I'm gonna say that it's right up against this prior high, which is significant resistance, and then of course back to this whole zone directly overhead. This zone goes back to like sort of a couple of major peaks here, and so this would probably, and it could push a little bit higher. It could poke up into this. We might get, you might get a little bit of a retrenchment and then another push higher. So there's a lot of what they call bear traps, it seems like, since this whole rally started. So anyway, that's all the time I'm going to take on this today. So we'll just have to see what happens, and I'll see you back here, same time, same place.